Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. First of all, do inform me if I'm clearly audible and the screen is visible. I hope there is no issue that is coming. So today we are going to discuss two very important news articles. The first one is regarding the important master action released by the Reserve Bank of India. In the press release also there is the mention of this master action, okay? That is the e-mandate framework. So we will discuss that what is this e-mandate framework that has been released by the Reserve Bank of India recently only, that is on 21st April. Then we will also discuss about the SEBI that has extended the validity of the IPO approvals and such. So both these news articles we are going to discuss in today's session. So give me a thumbs up if I'm clearly audible and the screen is visible. I hope everything is fine. Okay. So there was a technical issue that was coming, but I hope everything is fine now. Now, let's get started with both these articles, and both these articles are important from the phase 1 perspective as well as the facts. They are also important from the phase 2 objective point of view. Okay, so let's get started without any delay. But before that, do subscribe to the YouTube channel of EduTap so you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session. And the link of the Telegram channel is provided in the description box below. So you will get the PDF within 24 hours. Okay. Now, let's get started. But before that, there is an important announcement that for March Finance Current Affairs, I'm going to bring a monthly revision session that is tomorrow only at 5 p.m. So all the different finance current affairs, that are the SEBI circulars, IRDI related articles, the Ministry of Finance related articles, any updates that have happened in the finance current affairs, the important topics, the important finance current affairs, they all will be discussed in detail in the monthly revision session, plus your revision will be there. Okay, so we will discuss the MCQs and then we will discuss about the topic in detail, so that you have the clarity that what topics are important, and many of your finance current affairs will get covered from the March in this one session itself. Okay, so all the important finance current affairs we are going to cover tomorrow in the monthly revision session of the March finance current affairs. Okay, so be present in the session. Now coming to the next one, let's start with the topic now. So digital payments e-mandate framework 2026, the master action has been released by the Reserve Bank of India. Okay, and the RBI has said that in exercise of the powers that have been provided through the Payment and Settlement System Act 2007, the RBI being satisfied that it is necessary, it is important in the public interest, hereby consolidate. So the RBI has consolidated all the different e-mandate rules and regulations that were released, as well as the RBI has also released some minor changes also. Okay, so basically the RBI has consolidated all the different circulars that were related to the e-mandates that were issued. So all the different circulars have been compiled in this one direction, in this one master action of the e-mandate framework 2026, as well as there are certain minor changes that have been brought, that also we are going to discuss. Okay, so first of all, what is the applicability of this digital payment e-mandate framework? So the provisions of these direction shall be applicable to all payment system providers. Payment system providers are the ones that are providing the payment system. Like the UPI is being provided by, any idea? The UPI is being provided by NPCI, right? If we are talking about the prepaid payment instrument, that is the wallets, the digital wallets, they are being provided by the different entities like the Paytm. Okay, there is also the digital wallet that is provided by the Amazon Pay, let's say. Okay, so there are the digital wallets that are provided by the non-bank entities. So these are also the payment system providers, because they are providing a payment system so that the payment can happen. As well as there are the cards that are the payment system provider for the cards are the card networks. For the debit cards, for the credit cards, the card networks are the payment system providers that are basically providing the basic infrastructure so that the payments can happen, the payments can be done. Okay, now the payment system participants, who are the participants in the UPI ecosystem, who are the participants? The banks, they are the payment system participants. Okay, they are the ones that are completing the payments. There is also the Google Pay, Phone Pay. They are also using the UPI interface through which we are able to make the payments. Okay, so these are the payment system participants. As well as there are the payment gateways, there are the payment aggregators, that provide. So payment gateways, payment aggregators, basically they are connecting the merchants with the customers, and the payment aggregators, they provide different like the payment can happen through the UPI, the payment can happen through the wallets, the digital wallets, as well as the payment can happen through the card networks, through the cards, debit card, credit card and such. So payment aggregators, they provide the interface so that the customers can make payment to the merchants. Okay, so payment aggregators, they are also the payment system participants. This is the idea. So I hope this is first of all clear that which entities are the payment system providers and which entities are the payment system participants. Payment system providers, they are providing the payment system, like the NPCI is providing UPI, different non-bank entities, different entities, they are providing the digital wallets. There is also the card networks that are like they are letting the card work. Okay, so they are providing the infrastructure for the card system to work. Payment system participants are the banks, the Google Play, Phone Pay, the different payment applications, and payment system participants are also the payment aggregators, payment gateways. So these provisions are going to be, or these directions are going to be applicable to all the payment system providers, payment system participants in respect of processing of recurring transactions, because e-mandate, electronic mandate, is for the recurring transactions, domestic or cross-border, using cards, PPI, that is prepaid payment instrument, that is usually the digital wallets and such, and UPI. These directions shall be effective immediately. Okay, now coming to the registration and revocation of the e-mandate, we will come to the limits. But first, let's discuss the registration and revocation in brief. So customers must complete a one-time registration process. I hope that, or many of you might have done the e-mandate for the mutual fund, let's say. Okay, so let's say you are doing the e-mandate. So when you are initiating the e-mandate, you have to do a one-time registration process. The e-mandate, let's say you want to send the money every month to the ICICI Prudential small cap or large cap fund. Okay, so you want to send the money every month rupees 2000, or every week rupees 2000 you want to send to the ICICI Prudential for your investment in the mutual fund, in the large cap or in the small cap, or let's say in the infra. Okay, or growth, direct growth plan, whichever plan you are adopting. So you want to send the investment amount every week. Now every week, because you tend to forget, I tend to forget. Okay, so whenever I have to invest somewhere and I want to invest for a longer period of time on the weekly basis or monthly basis, so e-mandate is the thing that we use, right? E-mandate, electronic mandate, is the thing that we use. So in that, we have to do a one-time registration process. The mandate shall be registered only after successful validation. Now the e-mandate, the electronic mandate, shall be registered and will be the registration process will be completed only after successful validation of the additional factor authentication. Additional factor authentication can be your biometric or can be the OTP, that is in addition to the normal process that is followed. So when you are entering the mutual fund, when you are entering the stockbroker app or the stock trading app, you might have to put a PIN to enter the stock trading app, or you might have to give a biometric to enter the stock trading app. Okay, once you have entered the app, then for the mutual fund, you are initiating the e-mandate. For the e-mandate, you are doing the one-time registration process, for which you have to give the additional factor authentication, that can be the OTP. Okay, so this is the idea, that with the normal process, you are entering the application with the normal process, and after you have entered the application, once you are starting the registration process, then the additional factor authentication has to be validated, is mandated. Okay, so additional factor authentication can be your biometric or can be the OTP and such. Each e-mandate registered by the issuer must have a defined validity period. So there should be a defined validity period for the e-mandate. It can be like 1 year or 2 years, 5 years, which the customer can modify. Now the validity period for the e-mandate can be modified by the customer, as well as the customer can also withdraw the e-mandate. The facility must be clearly communicated at the time of registration, that the customer can withdraw the e-mandate as well as can modify the e-mandate also. If you want to, like before, let's say I was investing 2000 per month. Now I only want to invest 1000 per month. So I can modify the e-mandate also. Okay. The e-mandates can be for fixed or variable amounts, subject to the overall cap fixed by the RBI. So limits we are going to discuss, but the e-mandates can be for the fixed amount or the variable amount. You want to have a e-mandate for the monthly payments that you want to give to the Netflix. For this, you are having a fixed amount of $4.99 that you will be paying to the Netflix on the monthly basis on 1st of every month. Okay, but when it comes to the electricity bills, now your electricity bills tends to be in between, let's say 1500 to 2500 on the monthly basis. Sometimes it is 1700, sometimes it is 1800, sometimes it is 2200. So your electricity bill tends to be within this amount, 1500 or 2500. So you have given the e-mandate for the variable amount. Okay, for the variable mandates, for the variable e-mandates, customers can also set maximum value of any recurring transaction. That means for electricity bill, I have decided that the maximum that can be deducted is 3000. So I have given the e-mandate for the variable amount, and maximum amount that I have decided that can be deducted from my account on the monthly basis is 3000. More than this, if more than this is the bill, then the amount will not be deducted, and first the permission will have to be taken from me. Okay, so that is the idea. For variable mandates, customers can set their own maximum value of any recurring transaction, because I know normally this is the bill that I get. If the amount is crossing 3000, that means there can be some problem. Okay, so this is the idea. I can set for the variable mandates, I can set the maximum value of any recurring transaction. Customers can choose or change how they receive the pre-transaction alerts. So before the transaction happens, there are alerts that are sent. You can choose that you want to receive the alerts in the SMS form or mail form. Okay, so customers can choose or change how they receive the pre-transaction alerts from the issuer. And when do they receive the pre-transaction alerts? Do they receive it 48 hours before the transaction, or 24 hours before the transaction, or 12 hours before the transaction? So pre-transaction alerts are received 24 hours before the transaction happens. Okay, any modification in or withdrawal of an existing e-mandate shall require additional factor authentication validation. So basically I said that I want to change my monthly investment from 2000 per month to 1000 per month. So for this I will need to provide additional factor authentication to change any to modify or to withdraw the e-mandate. I will have to provide the additional factor authentication. Okay, so this is the idea. Now, processing of first transaction and subsequent recurring transaction. So the first transaction, when the first transaction is happening, additional factor authentication means this is the authentication. This is authenticating that you are the person who is initiating the transaction and from your account. So additional factor authentication is usually in the form of OTP, that is authenticating that you are actually the owner of your account. Okay, or the additional factor authentication can be through the biometric also. It is for authorizing and authenticating that, okay, whoever is applying for the e-mandate is actually the person who has the account. Okay, so this is additional factor authentication, additional authentication through the OTP or biometric. Processing of first transaction and subsequent recurring transaction. The first transaction under an e-mandate shall require additional factor authentication validation. That means when you are doing the first transaction, you have registered. When you were doing the registration, then also you needed to provide a additional factor authentication, as well as when you are doing your first transaction, then also you need to provide the additional factor authentication. After that, for the subsequent recurring transaction, there will be no additional factor authentication that will be required. Automatically the payment will happen. So basically for Netflix or for Jio Hotstar, let's say you are putting a e-mandate. So when you are registering the e-mandate, then you will have to provide the AFA, additional factor authentication, and when you are doing the first payment, then also you have to do the you have to provide the additional factor authentication. But the point here is that if the first transaction happens with the registration, then only one AFA will be required. That means during registration you have to provide a AFA, and during the first transaction you have to provide the additional factor authentication. But what if the registration and the transaction, like while the registration that you are doing, you are also initiating the first transaction? That means there will be only one additional factor authentication that will be required then. So if the first transaction is processed along with the registration of the e-mandate, then additional factor authentication may be combined and only one AFA will be required. That is the idea. Next is payment under e-mandate shall not be subject to the other limits or controls set by the customer. Think about it. Let's say you are insurance premium goes monthly, you have taken the health insurance or you have taken a life insurance, and your insurance premium is going on the monthly basis on 5th of every month, 5th of every month, and your insurance payment goes from your card, from your debit card, through the debit card, and insurance premium is of rupees 10,000 per month. Okay, so if you have a rupees 10,000 insurance premium and you have initiated a e-mandate, so that automatically the amount is deducted from your account and it goes for the insurance premium. But what happens that in the debit card you have also put a limit of 2,000 for the online transaction, because we tend to put limits on our card now, so that there is no fraud that is happening, and we are able to like initiate the transactions only when we want. So we have put, let's say I have put rupees 2,000 limit on the online transaction that can happen on the daily basis from my debit card. Now I have the limit of 2,000, but I have given the e-mandate of 10,000. So how the payment will happen? The e-mandate will be cancelled? No. If you have 10,000 insurance premium e-mandate, the mandate you have given, but you forgot that you have set the general daily online transaction limit of 2,000 on your card, the insurance payment would fail. Generally this will happen, but the RBI has exempted the e-mandates from the other controls that you are setting on your card or UPI or any other system through which the e-mandate is happening. So in the case of e-mandate, it will bypass any controls, any other limits that you have set for your card or UPI. So if you have initiated the e-mandate, if you have registered, if you have given the additional factor authentication, that means you are permitted this e-mandate to happen. You are permitting the 10,000 rupees to be deducted from your account every month through your card process. Okay, even if you have set other limits, that will not be seen. So payments under e-mandate shall not be subject to any other limit or control set by the customer. Now what are the transaction limits? So all recurring transactions may be authorized without additional factor authentication up to 15,000. That means for Netflix, for your any other, like for electricity bills, for your Netflix and such, for your Netflix, for your electricity bills, for any other payments, for recurring transactions, for monthly, weekly transactions, without additional, like for after the registration of the e-mandate, after the first transaction, there is no additional factor authentication that will be required in the subsequent months. Okay, so all recurring transactions may be authorized without additional factor authentication up to 15,000 per transaction. Transactions above this amount shall be subject to additional factor authentication. But for the payment of insurance premiums, subscription of mutual funds and credit card bill payments, they may be made without additional factor authentication up to 1 lakh rupees per transaction if you have already given the e-mandate. So I hope these are the important points that you will remember from this particular article. The other things are for the understanding purposes, but these are the limits. For the general e-mandate, for the recurring transactions, the limit is 15,000 without the additional factor authentication. Okay, but above 15,000 you will have to give the additional factor authentication. But for the insurance premiums, for the subscription to the mutual funds and credit card bill payments, for the, if you have given the e-mandate without the additional factor authentication, the money can be deducted up to 1 lakh rupees, or the e-mandate can be up to 1 lakh rupees. Okay, now pre-transaction, as I've told you that there will be pre-transaction notification that will be sent to you before the transaction. At least 24 hours prior, there will be the notification. So an issuer, that is the bank, usually they have to send a pre-transaction notification before the transaction happens. They have to send the pre-transaction notification to the customer at least 24 hours prior to the actual charge or debit. The pre-transaction notifications shall at the minimum inform the merchant's name, the transaction amount that will be deducted, the date and time or time of the debit, reference number of the e-mandate, and reason for the debit, that is the e-mandate that is registered by the customer. The issuer shall provide a customer with the facility to opt out of any particular transaction or the e-mandate. Any such opt-out shall be validated through the additional factor authentication, because the withdrawal of e-mandate or the modification in the e-mandate can only be possible with the additional factor authentication. Pre-transaction notification is not required for e-mandates. Remember this. This is also important. Pre-transaction notification is not required for e-mandates that are related to the balances of FASTag and National Common Mobility Card. So for FASTag and National Common Mobility Card, there is no requirement for the pre-transaction notification. Okay. So these are the important points. Pre-transaction notification has to be sent by the issuer at least 24 hours prior to the actual charge or debit. The pre-transaction notification should inform the customers about the details, and there should be the facility to opt out of the transaction. As well as the pre-transaction notification is not required for the e-mandates for the balances in the FASTag and NCMC. Next, an issuer shall send a post-transaction. After the transaction has finished, the post-transaction notification has to be sent to the customer. This notification shall at the minimum inform the customer about the merchant's name, transaction amount, date and time of debit, reference number of the transaction, e-mandate and reason for debit, that is e-mandate only. Details on, now this has been added recently. Details on grievance redressal. So after the transaction has happened, the details have to be mentioned in the message that you will be getting or in the email that you will be getting after the post-transaction notification, after the transaction has happened. In that, the details on grievance redressal will also be provided, so that if you have any grievance, if there is any fraud that has happened, or if there is any grievance that you have, you mandated 499 rupees but 4999, that is nearly 5,000 has been deducted from your account. So any grievance that you have, you can raise your grievance through this platform, okay, or the details that have been given. Now coming to the additional information, dispute resolution and grievance redressal. An appropriate dispute redressal system shall be put in place by the issuer, that is usually the bank, to facilitate the customer to lodge their grievances. RBI instructions on limiting liability of customers. Limiting liability of customers means if there is any fraud that is happening, let's say you gave the mandate of 499 but 4999 has been deducted from your account, okay, and it has gone to the merchant. So you have to raise the request because a fraud has happened or mistakenly this has been deducted, so you can raise the request. And RBI has instructed on limiting the liability of the customers for unauthorized transaction. Let's say you cancelled the e-mandate, you cancelled it, you gave the additional factor authentication also, but still the money is getting deducted from your account. So this is unauthorized transaction. Again, a kind of fraud is happening. So RBI has instructed on limiting the liability of customers for unauthorized transactions. This shall be applicable to recurring transactions under the e-mandates as well. Okay. This is the idea. Now, other provisions, no charges shall be levied to the customer for availing the e-mandate facility for recurring transactions, because when you do the e-mandate now, that means now you are free of mind. Every month the electricity bill will be paid automatically. Every month the insurance premiums will be paid automatically from your account. You just have to set the e-mandate once. Every month the mutual funds investment will happen automatically. So you are free of mind. You are getting this facility, okay, but there is no charge that is levied for this kind of facility for the recurring transactions. In case of cards, existing e-mandate can be mapped to reissued cards. Let's say your card has expired, your debit card or credit card has expired, or there is some damage that has happened, or let's say your card has been updated by the bank and such. So in this case, whenever the card is being changed because it has expired, it has been updated, so you are getting a new card. So it is said that the reissued card, the new card that you are getting, or the reissued card against the previous card that you are getting, that should also have the e-mandates already mapped, so that you again do not have to initiate all the e-mandate processes. Let's say I have set 5 e-mandate processes for my mutual fund, insurance premium, for my subscription, for my, let's say, subscription to Netflix, for my subscription to Jio Hotstar and such. So I have e-mandate of 5 or 6 e-mandates. Now I do not want to initiate it again. It is a time taking process, okay, so, or it can take a lot of my time. So in case of cards, existing e-mandates can be mapped to the reissued cards. Now an acquirer shall ensure compliance with these directions by merchants onboarded by them. That means, see, the RBI does not regulate every small merchant. RBI does not regulate the local gym, the startup apps and such, or even the Netflix and such. RBI is not regulating each and every merchant. RBI is not going to regulate the Meesho, Myntra, multiple apps that we use, okay? Instead, it holds the acquirer, that is the payment aggregators, because the payment aggregators, the payment gateways are the ones that are connecting the merchant with the customer and that are taking the money from the customer to the merchant. Payment aggregators, payment gateways, they are the payment system participants that are regulated by the Reserve Bank of India, for which the RBI has released these guidelines also. So RBI is saying that I'm not going to regulate every small merchant, every local gym, every startup app. I'm not going to regulate, right? Instead, RBI holds the acquirer, that is the Razorpay, Pine Labs, major banks. They are the payment system participants. So they are responsible. They are accountable. If a merchant tries to bypass the pre-transaction notification or doesn't allow a customer to cancel a mandate, the RBI will hold the acquirer, that is the payment aggregators, payment gateways, or the banks responsible for that merchant's non-compliance. Because the people, first of all, the public is allowed to cancel their e-mandates whenever they want. Just they have to do the additional factor authentication, as well as pre-transaction notification is mandatory 24 hours before the transaction happens. So no merchant should be able to bypass these kind of rules and regulations. If they bypass this, acquirer, that is the payment gateway or payment aggregator or the bank, will be responsible. So that is the idea. An acquirer, that is the payment system participant, usually shall ensure compliance with these directions by merchants onboarded by them that are connected with them. Now, first article is finished. Any confusion, anyone? Now, coming to the next article, a circular has been released by the SEBI in April. One-time relaxation with respect to validity of SEBI observations. First of all, what are the observation letter that we have to discuss, okay? See, observation letter is the formal communication that is issued by the SEBI after it has completed its review of the company's draft red herring prospectus. Let's say I want to initiate the IPO. I have a company XYZ and I want to raise the money from the public now, okay? So I am doing the initial public offering. That is for the first time I'm going to sell the shares of my company, sell the part of the ownership of my company to the public. So I hope everyone knows about the IPO, initial public offering. For the first time I am selling my shares to the general public. This is the initial public offering. Now before a company does the initial public offering, the company has to release the draft red herring prospectus. Draft red herring prospectus is basically the draft offer document that communicates and informs the public that why the money is being raised, what is the financial condition of the company, okay, what are the financials of the company, the cost, revenue the cost structure, the revenue structure and such, the management of the company and such. So basically the information about the company, the financial information about the company, why the money is being raised, how much the money is being raised, what are the lots and such, so the management of the company. So all of this basic information about the company is provided through the draft red herring prospectus, through the draft offer document, so that the public can make a good judgment to invest or to not invest, okay? So this is the idea, that the draft red herring prospectus, it is basically the draft offer document that the company releases to the public. It is an offer document which shows the financial condition, the management condition of the company, and why the money is being raised. So now what is this observation letter? Observation letter is the formal communication that is issued by the SEBI after it has completed its review of the company's draft offer document. That is the draft red herring prospectus. Observation letter is basically a green light that indicates the company has met SEBI's disclosure requirement. SEBI is not saying that this company is good, you should invest in it, or the SEBI is not saying that this company is not good, you should not invest. SEBI is just saying that the transparency norms have been followed by the company. The company has shown its financial conditions. Now on the basis of the financials and on the basis of the management conditions, the public can invest or not invest. So observation letter is basically a green light that indicates that the company has made the disclosure and has followed the disclosure requirements set by the SEBI, showing the financial condition of the company, and is legally permitted to proceed with the public issue. Okay, so this is the observation letter, that is the formal communication issued by the SEBI that okay, the company can proceed with the public issue. Now within 12 months, usually within 12 months, the public issue has to happen after the observation letter is released. So a public issue may be opened within 12 months. Within 12 months. So within 12 months, sorry. So a public issue, that is the IPO, let's say the initial public offering and such, may be opened within 12 months from the date of issuance of the observation letter by SEBI, or in some special cases within 8 months. Within 8 months, this is the date. Within 8 months, the public issue should happen from the date of issuance of the observation letter. I hope this is very much clear that the company is releasing the draft red herring prospectus. This is reviewed by the SEBI, and after the review, the SEBI releases the observation letter once the SEBI sees that all the information has been provided by the company as required, as per the disclosure requirement. So the observation letter is released within 12 months. Usually within 12 months, the public issue should happen of the date of issuance of the observation letter. In some cases within 18 months. Within 18 months, the public issue should happen from the date of the issuance of observation letter. Now what happened that the industry body, many of the stakeholders, they raised the issue that they are facing the difficulties of getting the money. Now at this point of time, let's say if a IPO is released, many because of the war-like situation, or because of the West Asia conflict, many of the investors, foreign investors, they are taking out their foreign portfolio investment. They are taking out their investment from the financial market of our country. As well as the new investors, the new foreign investors, they are not investing in such amounts as they used to invest, okay, before the conflict or in normal situations. So the many of the companies, they do not want to release the IPO at this point of time, when they know that the flow of money is less in the market, as well as many of the domestic investors are also apprehensive to invest in the market and the new companies. So many of the companies do not want to release their IPO at this point of time. They are facing difficulties. So difficulties is faced by the issuers in mobilizing the resources. They are afraid that they will not be able to collect the resources if they release the IPO at this point of time. Accessing the capital market in the backdrop of ongoing geopolitical tensions in the Middle East, the West Asia conflict that is going on, this has led to several issuers to defer, to not release the IPO within the timeline, okay. They want to withdraw their issuance plans. Now if they withdraw their issuance plan, that means again the whole process will happen. Again they will have to release the draft red herring prospectus. Again the SEBI will have to review it and provide the observation letter and such. So SEBI is saying that it will take a lot of time to go through the whole process again, and it will lead to the duplication of the regulatory processes and the lapses. So considering the representation of the industry body, the prevailing uncertain market conditions due to ongoing geopolitical tensions and subdued investor participation in the financial market at this point of time, SEBI has decided to grant one-time relaxation to extend the validity of the SEBI observation letter. So basically all the SEBI has decided to grant one-time relaxation, and the observation letters that were expiring between April 1, 2026 and September 30, 2026. So whichever observation letters they were expiring in this timeline of the 6 months, it has been said that these observation letters, they will be applicable till September 30, 2026. Let's say my observation letter for my company for which I was releasing the IPO, it was expiring on 10th of April 2026, and I have a friend who is releasing the IPO of his own company. His his observation letter was expiring on 16th of May 2026. So now how much extra time we have got? We have got till September 30, 2026. We have got till September 30, 2026 to release the IPO. We do not have to release it before 10th or before 16th April or May. Okay. So this is the idea. This is the one-time relaxation. Any confusion? Any confusion, anyone? So basically one-time relaxation to extend the validity. Validity is usually 12 months or in special cases 18 months. So for the observation letter, after the observation letter, from the date of issuance of the observation letter, within 12 months, the IPO should be released. The IPO should be released. But now it has been said that the observation letters that were expiring between April 1 to September 30th, 2026, they will be valid till September 30, 2026. So that is the idea. So if your observation letter was expiring in May, in April, May, June, July, August, so you have got extra time, some extra time. Okay. That is the idea. Now, subject to the undertaking from the lead manager to the issue confirming the compliance that is happening with the rules and regulations. Now, this is it. This is the first question. I hope you will be easily able to answer this question. Consider the following statements regarding transaction limits. Recurring transactions up to 15,000 can be processed without addition factor authentication. Insurance premiums can be processed without addition factor authentication up to 1 lakh rupees. Pre-transaction notification must be sent at least 12 hours prior to the debit. So which of the above statements are correct, that you have to inform. Okay. Now coming to the next question, pre-transaction notification is not required for e-mandates registered for auto replenishment of balances in which of the following categories. Okay. Such kind of questions can come in the phase 1. Usually it is both articles are more important from phase 1. Okay. Now, I will also bring questions from these articles in your shorts for the Recall, Revise and Rise series, that the shorts are released at 8 p.m. on Monday, Wednesday and Friday. So, the next short that will be released, yes, for Friday, there you will see the questions from these articles. Okay, and do remember that tomorrow you have a very important session on 24th April. I cannot emphasize it enough that how important this session is going to be, because all the important finance current affairs of your March will be in this session. Okay, so you will be able to revise if you have already covered. If you have not covered the finance current affairs from March, you will be able to know that what are the important areas that you have to focus on. We will discuss it in detail. So this is it for today. Thank you everyone. Thank you for joining. And this is it. Thank you everyone. Do give me the right answer of the homework.